Hi everybody, Brian from Bear Bull Traders here. It is Sunday, June 13th, or January 13th, skipping ahead a few months. Anyway, hope everyone's had a good weekend and just going to go over the week that was, take a look what we've got in store for the week ahead here. And let's get down to it. Just looking at some market internals to start off, we usually do um, some of the stocks that are at or above and below their 200-day moving average. They seem to be holding in this over 20% range, which isn't, I don't think it's much of a change from last week. 50s tends to be, I think it looks like it's moving up a little bit. So internals look like they're improving a little bit. Certainly these new high, new lows are turning a lot more green. And so, the SPY ended up 2% on the week. Things certainly turning around from prior weeks. So got a bit of a strengthening in the market, but don't know where things are going to go from here, as we'll see we take a look at the charts a little later on. So let's look at what's performing this week. Industrial goods, services, conglomerates, technology kind of in the middle of the pack. I was expecting to see a little stronger. Utilities at the bottom. It's been strong when the market was weak. Now it's weak as the market's been strong. And yeah, so basically same thing on a monthly performance. So industrial goods, basic materials edging up here. Let's take a look at the SPY weekly to start out. Yeah, we've come up here. We had a good week. We finished pretty much on the high of the week. Like I said, we were up another 2%. And we've come off from our pre-Christmas Day low pretty significantly here. And we seem to be getting into, obviously we're getting into this area of resistance where we're going to see some maybe, at least churning sideways, maybe a pullback. We'll see what happens. You can see here the volumes building a little bit during the week, not a lot. Let's take a look at the daily on the SPY. Kind of see here's the line where we broke down from this 263 area, and we really sold off once we broke this level that was tested 3 times. And now we've come back up, and we're kind of at a, like I said, we're kind of at a point of resistance. I mean, we could go a little bit higher, but you can see here on the daily, I saw the weekly, the volume picked up a little bit, but you can see as the week went on, volume really dropped off as we were getting approaching this level of resistance. So, it's really hard to say where we're going to go now. A lot of it, I think people were just laying off the buy and sell button just because we've got earnings coming in earnest next week. We're going to kick off the week. I think before the market opens, Citigroup is going to report, and I think what they say in terms of their guidance is going to have a lot to do with how that stock performs once they come out with their guidance numbers. And as the week goes on, we get into the thick of things. We've got JPM, we've got Wells Fargo, Wednesday, Bank of America, Goldman Sachs. So all the financials are going to be reporting early in the week. And then Tuesday, we've also got some airlines reporting. We've got UAL, Delta Airlines. So we'll see. Again, it's going to depend on a lot what the CFOs and the CEOs say on these conference calls about how their forward-looking guidance looks. And I think that's going to have a lot of impact on whether we continue to go higher, maybe test this level and punch through it, or whether we churn sideways, or maybe take a leg back down to either this level, 244, or even back down to 234. Again, going to be somewhat guidance dependent. So here's the financials. Here's what the XLF, the ETF for the financials. You can kind of see here. Looks a little like the SPY, although it actually started selling off a lot earlier than the SPY did. And you can see here it's come back up to what looks like a level of resistance where we sort of did a pause here and then broke down. So again, this is going to, the performance of this is going to depend on what guidance we hear from Citigroup on Monday morning, and then subsequently JPM and Wells Fargo on Tuesday. Again, volume dropping off. I think again people sitting on their hands waiting to see what commentary comes out. Let's look at the dollar. I look at the UUP. That's kind of the dollar performance indicator I use. Measures a dollar performance against other currencies, and that has an impact on the commodities. And you can see here on the weekly, the dollar has been selling off this trend line that's been in place pretty much since we had a double bottom beginning of the year. Has broken, and we'll see if it continues to further weaken against other currencies like the yen and the euro. So if it does, obviously, it's a good proxy for how things like gold and silver, possibly oil, natural gas perform as the dollar gets weaker or stronger. So let's look at some plays we have been in. Silver, I'm still in a little bit, and got this on the breakout, and it's been performing nicely, kind of consolidating here. I think it's kind of waiting to see which way the dollar goes, and same with the gold. And we're just, I guess it looks like it might be doing a bit of a pendant. Both of these stocks, more gold, I guess it's doing kind of a pendant here, and we'll see if it continues to break higher. It's at pretty significant level of resistance around the $1,300 per ounce level, and we'll see if it can break higher. It's certainly, if it gets through that level, it could go significantly higher, or it may stall. We'll see which way this pendant breaks. Another ETF that have been in the emerging market. Again, if the dollar weakens, it's a good helping hand for the emerging market stocks. They'll tend to go higher, and nice little double bottom in here. Got into some EDC, which is a higher beta play compared to the EEM. But they're both emerging market ETFs, and you can kind of see here, again, double bottom, and getting up into a level of resistance here. Hope if it can get through this level, maybe after a pause, a little bit of wood chopping here, as they say, and hopefully break higher to this level at around 76, and then 75, and then hopefully we can get up to high 80s. That would be the next stop. So, yeah, and what was hot this week? Pot stocks. This is CGC. Sorry, you can't see that, but that ticker. But it is CGC weekly. You can see we had a big sell-off here, topping action. Huge move from 50s down to this 25, 26 level. And then we had a big pop here, a bit of pot news this week, and it drove the entire sector. Tilray, NBev, all the pot stock plays were up this week, and it was nice to catch. Caught a bit of a bounce on that, and it's back up to kind of this level of resistance here. There's a moving average. There's this area where it stalled out and broke lower. So I'm not expecting a big move this week from these. They've had a big move last week, and so they may end up being a little bit choppy now. And we'll see if through that chop we get a trend back higher or pull back again. So again, they may trade partly in lockstep with the market, and the market's going to depend on, like I said, what the earnings and the guidance going forward looks like on these companies that are reporting next week. So that's the week in review, and Swing Trade, my book on Amazon. If you haven't checked it out, please do. We're also getting people, if you're interested, to sign up on at the BBT website. You can sign up for our trade alerts, looking at opportunities, and if we see something decent, we may put it out on an email blast, so something else you might be interested in. Anyway, everyone have a great rest of the weekend, what's left of it. I know there isn't much left, but we'll see you in the Bear Bull Trading Room on Monday morning, tomorrow morning, bright and early. Ciao for now, guys.